Hello, everyone. It's Jason from mapsignals.com, where we map big money in and out of markets. Simple as that. Please like and subscribe. Leave some comments below if you like what you see. And head on over to mapsignals.com. Be sure to give us your email so you can sign up for our free blog for great commentary and insights, kind of like what you're about to see here. So wait, listen, markets are in turmoil. Stocks are getting crushed. People are freaking out. I am getting calls left and right. What is going on? I'm going to go over that today in today's video. And more importantly, what do we do about it? So we're going to identify great opportunities in oversold ETFs. Let's just get into it right now. So listen, before we get into those ETFs, we need to understand what's going on. Really quickly, plain simple language. The Federal Reserve Bank bailed us all out in the great financial crisis and the housing crisis. They did it again with COVID. They've kept interest rates very low, near zero, and they pumped a bunch of money into the system that makes everybody feel safe and like no one's going under. What it does, though, is it creates vicious inflation, which we're all experiencing right now, right? You see it at the pump, you see it at the grocery store, you see it at restaurants if you're going out. Everything's getting more expensive. So the Fed has to fight that, right? So what did they say in their meeting recently? They said, hey, we're going to wind down quantitative easing, means take some money out of the system, and we're going to raise rates, which makes it more expensive to borrow money for growing companies. And, banks are going to do well because they lend at higher rates, but the borrowers and the people borrowing the money, it costs more to finance debt and it should fight inflation. That's what's happening. But investors are totally freaking out and punishing stocks. So I think this is all an overreaction. I think this is like a taper tantrum 2.0. If you remember years back, Ben Bernanke said we were going to roll back purchases and everybody freaked out then and sold stocks. It was a great time to buy growth. And that's what I think is happening now. So how do we know where the money is going in reaction to this news? And how do we use that to our advantage? So let's just get into it. I'm going to move over to the Map Signals portal and I'm going to show you. So first thing you need to see, here I am at mapsignals.com. I've logged into the portal. You're looking at all the big money buys and sells over the last year. Now I'm just going to zoom this in for the last 3 months and look what you see here. You see a ton of selling. These are all individual stocks. Buying has waned significantly. Okay. And then if we go down here and we look at ETFs, we see monster selling. So what can we take from this is that obviously markets are significantly under pressure, but where is the value? Where is that money rotating around? We're going to move over here into our sector analysis. I'm going to just punch up from the beginning of the year. This is the most important thing. You can see a ton of selling versus not a whole lot of buying. But more importantly, look at this. These are all the buys since January 1st, individual stocks. 30% are financials and almost 20% is energy. That means 50% of all buying is in just those two sectors, and the selling is in healthcare and technology. Now, I just showed you that ETFs are seeing a lot of selling. So let's look within the actual ETFs. What's going on? So at mapsignals.com, we take all the ETFs out there, all 2,700 of them. We look at all the stocks that compose them. We apply those scores and then we rank them. So what you're looking at right now is a ranked list of the most easily traded ETFs by big institutions. So that way we can see big money moving in and out. Here's what I want you to see. Just like we saw a moment ago, tons of energy up front that's getting bought, tons of financials. So look, right here in the top, we see natural gas, we see energy, we see oil. A little lower, we see regional banking, banks, financials, dividend equities, financial sector. You get the picture. Money's flowing into energies and financials like we just saw. But what do we see when we get to the bottom? Growth is getting crushed. The Russell 2000 ETFs getting sold. Internet's getting sold. We're seeing small caps, softwares, telecom, tech. We're seeing a bunch of the speculative stuff like cannabis, biotech, all this web-based stuff. So growth is getting sold. So this, they say you got to go where hell is hottest. This is where we're going to find some of our opportunities. So let's get into our oversold ETFs to buy right now while the market is under pressure. All right, so here we are. We're in our Map Signals portal again. The first oversold ETF up today is IGV, the iShares Expanded Tech-Software Sector ETF. This thing has been getting hammered, people. 446 high of November 9th, and it's been sold all the way down to 348.45 as of yesterday's close. But here's what I want you to focus on, okay? Let's zoom in a little bit. And let's zoom out at the same time, because I want you to look all the way back. I mean, going back years, this thing has just been straight up, and any meaningful pullback has been an opportunity to buy. Red over here, opportunity to buy. We're seeing a lot of red. It holds a lot of phenomenal stocks in it. Software companies we're all familiar with, and its largest holding is a company most of us are using right now, Microsoft. And look at this thing. It has been a lion for years. We're seeing red. It's being punished. Look at the top 20 instances. All the time it's appeared. Talk about a stairway to heaven. That thing went straight up like a rocket. IGV holds that. Okay, so next up is a First Trust ETF. This one is called FBN is the ticker, the First Trust Dow Jones Internet Index Fund. We saw buying a while ago, hasn't really gone anywhere, and now it's going straight down. We saw a high of around $250. It's been sold down to 200. But again, looking at the long-term trend here, as I zoom out, you see a very clear picture. This might be a pullback opportunity. So what stocks does it hold? Well, it holds great companies like Amazon, in my opinion, unfairly punished in this market. And you can see the long-term trend here. You kind of want to pick up when it's red. So FDN holds Amazon, another great opportunity under this pressure. I think, hey, when things are ugly, sometimes we look up to the sky, right? I know that was cheesy and terrible. Next one is First Trust Cloud Computing ETF, SKYY. People are panicking, selling this one down from 118, almost 119, all the way down sub 100, close to 92 right now. Again, looking at the long-term trend, now we're going back to 2016. I mean, it's a meaningful pullback. I think it's an opportunity. It holds great companies, ones we're all familiar with. There is one specific stock I love in there. It's one of its highest holdings. That is Arista Networks. This is a company that just keeps coming out, firing on all cylinders. That's just a one-year chart. You want to see years of performance, going back all the way to 2020, that thing has been a one-way train. It's a phenomenal stock. It's an outlier. It's been on our reports many times to see that stairway to heaven, starting all the way back at $20. It's pulled back to 125. Another ETF that is just getting skewered right now is iShares Russell 2000 Growth ETF, IWO. It has come in substantially from a November high of 327 all the way down to around 250, where it's just getting punished. It's laden with growth companies, and growth is under attack right now because the thinking is if the Fed raises rates, it costs too much to borrow money and it's going to impact growth and hurt margins. Let's say that even does happen, it's likely temporary. The future of our long-term growth in equities is always companies growing their sales and earnings. So I think it's temporary. And if we look at a longer-term trend of IWO, it's had a significant run up. Now, this is a little bit of a riskier play. It's got Long-term potential, in my opinion, it holds a great company called Synaptics. This is a great one. Growing sales and earnings, great profit margins, makes a lot of money. It too is getting punished right now, but you look at the longer term trend, once again, we get a big pullback, and this thing has been an outlier on our report many, many times in the past. So that's another interesting oversold ETF. And last but not least, poor Cathie Wood. Her ARK funds are just getting demolished this year. It's really rough. It's been a rough 6 months for her. But she has some really interesting ETFs. I don't love all of them, but ARK Innovation ETF, ARKK, talk about just getting mauled. This thing has just been getting punished. It was one of the darlings of last year, had a great run up after a long uptrend here. It has pulled back substantially. Now, this thing holds some terrific stocks in it. Tesla is holding up relatively well along with the rest of the market, has a phenomenal long-term trend. I think, Elon Musk is an innovator. Love him or hate him, you can't deny that he is succeeding right now in the marketplace. Now, as far as ARK funds go, I think we all look back in time and wish we could pick something up when it didn't look so scary to buy. Maybe, real estate that was cratering in the great financial crisis, or tech stocks in the 90s. This is kind of, to me, a unique opportunity that's upon us now. And this is yet another very oversold ETF to look at. So there you have it. You know what they say, one person's junk is another person's treasure. Right now, stocks are getting pounded, and these 5 ETFs are extremely oversold. We're talking about IGV, FDN, SKYY, IWO, and ARKK. Those are your 5 oversold ETFs. Remember, if you like what you saw today, please like and subscribe. Leave a comment below. Don't forget to head on over to mapsignals.com, put your email in there, and sign up for our free blog. And remember, keep your cool. This is not going to last forever, and we're all just going to be fine in the end. So look for opportunity. Best oversold ETFs. I will see you soon. Take care.